Fed minutes, what a surprise. When we were looking at what we were to expect from the Fed minutes, it's pretty easy, right? Fed minutes is basically just an echo chamber of what happened at the previous Fed meeting. So when we come into this, we don't expect a major change or a major volatility spike, if you will. All that Fed minutes pointing us to today, when we really get down to the nitty gritty, is the same thing that was said. Imagine this, you're in a courtroom and someone's writing down the entire dialogue of this court case or what's being said, right? That's essentially what the Fed minutes are. So when we look at this, you can't decipher through this and say, oh, well, this is important based on the new data release that we just had. No, you can't say that at all because it is not. It is not accounting for all the important information that we're getting here. And you need to understand that. So when we look at this, that's what we had the expectation that Fed minutes wouldn't have that big of an impact. But what I will say is that there were still members, a few members coming out pushing for 50 BPS. So that's the question now, is the 50 BPS on the table from the Fed members to speak? Today we will have Fed Williams to speak later on in the evening around 5 p.m. Central, I do believe. And then tomorrow we have some extremely important data to be talking about. However, before we jump into what's happening on the charts, I have to ask you to do two things. Consider liking, consider subscribing. Every single day we go live here on the channel. And then on top of that, I make a video at the end of the day doing a recap on what happened throughout the day, trades that I'm looking for the upcoming day, and then other things regarding supply and demand based on the markets. And the newsletter link is down below where we give you all the key notes to know every single week, and more information will be coming out on that as far as our blog as well. So make sure you're staying just overall tapped in. The Discord link is down below if you want to trade with us every single day, but don't feel pressure whatsoever. I encourage you just to see if the channel interests you. If you don't get any information from the channel, then I can guarantee you're not going to get any information from the Discord. So when we jump in here, let's talk about what's happening here. When we look at the charts, it's pretty clear. Our supply and demand levels, we had our demand here, we invalidated, we broke down. As I mentioned from yesterday's video, and as I mentioned on yesterday on Twitter, and I always say Twitter because it's very important to me that you guys can see exactly what I'm talking about. I post a lot and I try to give as much free content physically as possible. That's what my focus here entirely is to continue to give me as much information as possible. And as you see, we were coming into demand next. Demand buyers can't be found. I'm looking at that 200 SMA. Okay, that was yesterday. As we move into this, where are we at? We've invalidated this demand once again. We trended sideways, invalidated, and pushing down more. Okay. Now, when we really get down into the nitty gritty, what are we looking for? That 200 SMA around 11.95 roughly. That's on the daily. Yesterday's video, we went over all of our targets in detail, and that's really where we're pushing down towards. Now, going into tomorrow, there's some very important data that will be released. And on the after hours today, we have NVIDIA earnings, which are very important. Now, if we look, let's talk about it. Tomorrow, what do we have? We have GDP being released, your Q4 revision once again. This will be interesting. This will be a very interesting to see how we come out here. Because overall, we expect growth to slow down. No surprise. Bear market, weakness across the board. You can't really expect much. Jobless claims, those will be important. But as of right now, we continue to see unemployment drop. We see growth, slowing. And it's just not a good area for the economy. All data points to more downside, if you will. And the best example of what we talked about is showing what's happening now is what happened over in Australia. Remember, Australia, the record-breaking drops happening on inflation left and right. They're like, oh, we're back. Our economy looks great. It looks healthy. But when you get down to the nitty-gritty, what happened? A resurgence of that inflation. And it's almost to the point that Australia's inflation is kind of becoming entrenched. And that's the worst case scenario here. So when we look at this data, it's very important. And then obviously on Friday, last day of the week, what do we have? PCE. And the Fed has said PCE is the most important data pool. So again, I just want to encourage you to take this week with a little bit of ease, but ultimately we still understand the downside is what we're looking for. Downside is still on the books here. And if there was anything that was going to give you a little bit of momentum, it was most likely these Fed minutes. Why? Because again, it's an echo chamber of the bullish outlook that we had from our last Fed meeting. And it seems like it didn't do much. If anything, right after this was released, you proceeded to continue to get rejected from your push up that you had. So that's where we're at right now. Again, target has to be here on NQ towards 11.95. Nothing earlier, nothing sooner. That's my target here. Now moving over to ES futures, looking at SPY. How are we tracking along here? We broke through again yesterday's demand, came down further, and we're just slowly edging down here. My opinion, again, the 200 SMA on the ES is as well going to be your target. Now remember, previously we tested these not in tangent, okay? We broke above the 200 SMA first on ES and then on NQ. Now they want to test in tangent. Very interesting to see. Around 39.50 is your target here. So another 40 to 50 points of downside here on ES futures, which would point SPY, in my opinion, to come towards my target of roughly 394 to 392. And that's where we're ultimately looking here. But your next big demand coming up is going to be all the way down near 387 up to 390. Those are my big levels that I am watching. And we've already broken through our previous demands. These are invalidated, so they are gone. They are cold. They are gazpacho, if you will. That's what we're looking at, okay? So there's no real highlight here. If you get a bounce here, it would probably just come from GDP if it came out really good, but I just don't see that happening personally. Going over to VIX, painting you a picture of what's happening here. What did we say about VIX yesterday? We're looking at the daily time frame. The big level that I'm watching is around $24. That's the monster level that we need to really mount above. Painting you a little bit of a picture here. If you come into the, let's get the price range tool about right here, around 24 to 23 roughly. This has been 25, maybe the high end 25. This has been your big level here, right? If you look, giving you a broad viewpoint here, as you can see, we've seen a lot of wicks into this range and rejecting a lot over the past year and a half, 2 years, okay? A lot of rejections. But what's the one common denominator? When you can mount above this area and you bounce, you tend to get a pretty gnarly upside move on VIX towards 30 and above, 30 being conservative. We dip down, 24, we bounce right back to 35. Broke above, dip down, bounce towards 35. Dip down, bounce back towards 27, rejected, and we can't get back above. So that's where we're at now, and that's what I'm looking for. Can VIX get back to 24 and hold that level? If you can, I do see continuation for the VIX, and I'd definitely be looking at that. The dollar. Now, I've said a lot, specifically here on the dollar, and I don't want to go too heavy into the dollar because I don't want to confuse anybody. Now, when we look at the dollar, a few things we do need to be talking about. Where's your key level down here? About 102 to 101 roughly. You bounced in this range, had a little bit of a wick down, but overall you held this range and you're pushing back up. Again, the only area of significance that's even close to the strength of the 101 to 102 range goes all the way back to around 109, which we've talked about quite a bit. Okay, remember we held this, we bounced it a lot in that range. Now the dollar, risk on, risk off is the best way we can kind of talk about this. As we look here, what's happened? We talked, and a lot of people have mentioned what's happened here with the bull flag, if you will. And if we look at what's happened here, you had that little bit of a bull flag, kind of broke out, pushed up to the upside, right? And that's what you're doing now, tracking on top of the daily 9 EMA, pushing towards that 200 SMA, which is close to the 106.5 region. You continue to look strong here on the dollar for a bounce. Now, what's an underlying factor we need to be watching for here are the bonds, the 10-year yields, the 20-year yields, the 30-year yields, right? We need to be watching what's happening there. We're going to go to those here in a second. But the dollar does look good for continuation. But I will say, the dollar going up does not mean that the S&P, that Nasdaq has to dump. I want to make that very clear here. You need to understand that. That does not mean you have to dump. However, we are seeing a pretty vigorous and strong bounce on the dollar. So there is a little bit of a risk off mentality, in my opinion, stepping in here. I would take into consideration. Again, target would have to be around 106, possibly even 105.2 there is also. Going into the yields, again, I'm going to get into some juicy stuff here in a second, but I need to cover a lot of this. Yields have painted a very interesting picture. Okay. The inversion is very close. We made a higher high for the first time in a while here on the 10-year. I have to assume you're going to test the 4% level here. You've already gotten dangerously close. The 10-year yield over 4% is very dangerous and very bearish for the entire market. The 30-year yield, again, you're very close here. Giving you that inversion chart. What's happening here? Look at where you're at. You are fully inverted for the first time all the way going back to early December, okay? Before that, when was your last time inverted? In September Okay, September marked a local bottom on the SPY for a little bit of time on ES when he started bouncing into December. It's worth mentioning. Do I think the bottom is here yet for ES and the Nasdaq on this dip? No. I think this time specifically, you're getting a leading indicator for the yields and this inversion. Shocking to me, to say the least here. The worrisome part here is, does inflation become entrenched? And that's the $1 million question as we speak. And if you look here at the inversion chart, it's absolutely terrifying to look at, because when we really get down to the nitty gritty here, it's disgusting. Yeah, we had these higher lows here, but I will say if we come out and just draw it a little bit more, you can still see you're still structurally making those higher lows. You need to understand this, okay? You have to be able to look at what's happening. Higher low, higher low, higher low, and barely a higher low here. And getting somewhat of an ascending triangle forming. If you know anything about this, it is a clear path for continuation, if you will. So I just really try to push people to remain cautious. Not financial advice, do your own DD. But the inversion is dangerously, dangerously high, continually making higher lows here. Going back to the 10-year, the biggest sign here is the violence and the amount of momentum in the 10-year yield. The last time we saw this type of momentum was back here in August. And I want to give you a very quick visual of what happened the last time this type of price action happened, right? So when we point out the SPY, giving you a quick visual, trying to bring this up a little bit more, as you can see. So right here, when you start to push up here, this is the 10-year yield rising. This rose all the way into, met highs at locally October 21st. 4th. What happened here? You dipped on SPY all the way down until that date. It's worth mentioning. You had a little bit of a pullback back here in early September, but August through September, a lot of downside. Definitely looking similar. What are you seeing now? You're starting to see the turnover. Very similar to what we saw back here. So again, all I say, keep your head on a swivel. Some of these indicators are definitely pointing back up. And again, I want to say, when you're looking at indexes, I don't know how to clarify this. You do not need to time the top. You do not need to time the bottom. What you do need to watch for is the overall trend. As we look at these trends forming, it's important to take the signs of caution, take the signs of watch out, because there's a lot of danger in this right now. And if anything, if you are bullish here, I think right now, if anything, the stock is the play to make. Options, dangerous to play to the upside. Personally, in my opinion, take that for what you think. The TLT, what's happened here? Again, TLT, pretty concerning what's happening here. If we look right back here at the daily, giving you a visual, what happened, remember, clear downtrend that had been formed going into this. You had the bump and run, you broke above, bump, pushed back up, but you got a double top rejection at the 200 SMA there and pushing back down. What I am looking for here is a break and hold below 100, specifically on TLT. That's what I want to see, a break and hold of this level roughly around 100. Once we get below that, I think the market again will be in extreme danger. Even though TLT, which usually signs the overall health of the market, has been dropping, we have not seen the same type of drop here on SPY. Granted, we've dropped from 416 down to almost basically 400, around 18 points, but it is not anywhere near the significance of what we have really seen, okay? You need to understand that. It could get very ugly, like what we saw back here in August. You got a little bit of a drop, but then you started to free fall from 112 all the way down to 90. Very concerning. Again, things to be watching. Big signs are definitely playing out here. Now, I want to go over some stocks that I'm liking and stocks that I'm really looking at. Now, NVIDIA did have earnings. I didn't have time to watch NVIDIA's earnings and then make this video, so we have to keep this kind of quick and to the point. Now, when we look here, I want to go over a few things really quick. We'll peek at NVIDIA. You're just sitting overall flat. My favorite trade has been AMD. Today, I cut around 50% of my trade. I got back into it, cut another 50%. Why? Again, you're holding below your massive level, the 200 SMA, 78.8 roughly right now. But you're also holding below 78 and making lower highs continually. As long as this continues, I'm a massive bear here. Going to the 4-hour chart, you have quite a few gaps also here on the daily. A gap down to 75, a gap down to $70, and a gap down to 64. So as long as AMD remains weak with NVIDIA, and I just don't think NVIDIA is going to have strong earnings. However, they have a partnership with Microsoft, so anything is a go. I still like AMD to the downside. My new favorite play right now has turned into Amazon. I think it's a little bit risky. You need to be a little bit careful here. I'm going to say that right now. However, I'm going to tell you, I love the downside opportunity of Amazon. I'm going to tell you exactly why. Stay with me. Don't attack me. I love it. Today in Cheddar Flow, looking at some of this price action going into Amazon, this is some of the most bearish price action that I've seen in recent memory. It is disgusting. You have, if you price in any contracts above $500,000 on premium, you have 0 call options coming in on this. So only very small orders are coming in, while there are extremely large equity holders coming in for the puts. And at that, they are near dated, March 17th. And then you have 6/16, I believe that's June 16th. I could be wrong. Again, dates, don't attack me. Keep that in the back of your mind. I love that right there. Also making a bear flag here on the 4-hour, which you tried to break underneath also. Again, all I say, keep it in the back of your head. Keep watching. Very dangerous area in my opinion. Now, what I want to do really quick before we go any further is also show you what's happening here on Bookmap. Now, Bookmap, I've tried to keep it. During January, we didn't have great price action, but luckily for us, price action lately has been fantastic. As we look at the price action that happened today, very interesting behavior. In the beginning of the day, what we saw here, initially, again, aggressive selling, slapping the ask over and over. What does that mean? When we look at ES and what was happening with S&P futures, you were pushing down. They were not setting limit orders. Down, all the way into 39.90, and then you bounced. And then from there, you had trying to play back to the upside. But I did a live educational stream today, and I want to just go over something really quick, just so you can identify the importance of playing the trend. On the downside, how many walls did you really have to go through? Okay, like sell walls. This is just level 2 data so you can see. Very minimal, small orders until 39.90. Okay, the path of least resistance was to the downside. Now from this chop, what did you see? All the way back up when you bounced into Fed minutes, what happened? Nothing but resistance. Sellers setting levels, setting massive levels, and then Fed minutes came out. Obviously, you started dropping back down once again. What am I trying to say here? When you identify the way that the trend is moving, and when you're able to identify who has strength, buyers versus sellers, obviously, in my opinion, sellers have the strength. It took you 30 minutes to push to lows, and it took you 3 hours to push back to highs. Think about it. Think about who's setting the walls. Think about who has to put more effort, who has to put more volume to push you to a certain direction. Right now, buyers have to try a lot harder than it is for sellers. That's the importance of understanding the trend and not getting away from it. So people right now are asking me, Tyler, do you like calls on X stock, whatever it may be? For me, no. I want to follow the trend because as you can see here, when I'm trading as an options trader, I'm trading for volatility, quickness, what's happening with theta decay, IV crush, everything in between. I would side all day with this rather than this, okay? So you have to understand what the market's giving you and trade what's happening. Again, when you dump from Fed minutes, what happened? 40.22 all the way back down to lows of 39.80, new lows on the day. Keep it in the back of your mind. That's what we're watching for here. A lot of danger, and I think there's a lot of danger here in the market right now, especially with GDP and PCE. If PCE reports bad on Friday, I'm afraid for what's going to happen. It could be absolutely brutal because Powell will be forced to step in and identify and say the words inflation has started to rise again. And that will be catastrophic for the economy. Mark my words.